Hey everyone, welcome back to the Web3 Daily Recap. Today's market, honestly, it gave me mixed signals. When I first opened my charts this morning, I saw green, but not the kind that makes you yell, bull run. Bitcoin's just chilling around 114th like it's waiting for someone to tap it on the shoulder and say go. Ethereum, on the other hand, showed some real movement. It climbed up toward 3.7k, then eased back to hover around 3.55k, definitely stronger than BTC for now. And yeah, the mood shifted. Yesterday people were cautious, but today, greed index shot up to 64. That's right, people are starting to feel bold again. But when you zoom into alts, it's a bit of a mixed bag. XRP popped above $3, probably big players making moves again. Solana's up around 3%, nearing 170. BNB, solid and boring, up just a little. Then we've got Toncoin cooling off slightly, down about 0.5%. Arbitrum, man, it's rough dropped around 8% overnight. Fell back near 0.38 after hitting 0.48 just days ago. And meme token PP, flat, barely moved. Total crypto market cap is sitting just above 3.7, 3 trillion slightly higher than yesterday. But the vibe? Still cautious. The big players are watching macro triggers like interest rates and Fed commentary. Everyone's got one hand on the mouse, ready to buy, ready to bail. So yeah, the market today, not crashing, not pumping, just kind of breathing, waiting for someone to blink first. There's a tweet I saw the other day that cracked me up. It said, if that hard drive ever gets found, it'd be the biggest punchline in Bitcoin history. At first I laughed. But honestly, there's a weird truth to it. This week's most viral crypto topic, that British guy, James Howells, the one who threw away a hard drive with 80 Bitcoins on it. Yeah, that guy's back in the headlines. Except this time, he's giving up. Quick recap, back in 2013, Howells was clearing out his office and accidentally tossed a hard drive that stored the private key to 80 BTC. That's like, what, over 900 million now? He realized it way too late, and ever since, he's been on this crazy, borderline obsessive mission to dig through a landfill in Newport, Wales, trying to find it. We're talking lawsuits, funding proposals, even robots and AI-powered trash scanners. But after 10 years of trying to convince the city to let him excavate a site filled with over 110 tons of garbage, and after losing a lawsuit last year, he's finally tapping out. He's done. That drive, and everything on it, is gone. Now here's where it gets interesting. Some folks admire him 10 years of obsession, hustle, and hope. Others think he's delusional. But the part that gets me? He never once mentioned if he had a backup of the private key. Not once. And that's got people asking, was there ever really a shot of recovery, or was this all just a show? Because in crypto, we know the deal. You don't lose the hard drive, you lose the key. And without that key, it doesn't matter if you've got the drive or 1,000 drives, it's gone. So this whole saga becomes less about a guy searching for treasure and more about us, the community, asking, are your coins really yours? That's why this story stuck with me. It's like watching someone chase a ghost, hoping one day it turns back into gold. But today, that ghost officially vanished. Those 80 coins, they're still untouched on the blockchain. A monument to one man's loss and everyone else's lesson. We move on, but damn, what a ride. I had to read this next headline 3 times before I believed it. The CFTC, yay, the US Commodity Futures Trading Commission just dropped a bomb. They're moving to allow crypto spot contracts to be listed on regulated US futures exchanges. Let that sink in. We're talking about spot Bitcoin contracts on regulated US platforms. Not futures, not derivatives, actual on-chain settlement. This could be the first time real crypto, not just paper, enters the US institutional trading system under full government blessing. It came straight from CFTC Chair Caroline Pham. She didn't just say it quietly, she made a whole statement. And it wasn't just her. The CFTC is even teaming up with the SEC's Project Crypto to coordinate this. They've opened a public comment period until August 18, asking everyone in the industry to weigh in. But what really made me pause? She said word for word, we're gonna make America the crypto capital of the world. Now that kind of talk used to feel like fluff. But in this new political cycle, with Biden out and Trump's team clearly more crypto-friendly, this is a real shift. The Genius Act, the Clarity Act, these moves are setting the stage. And this CFTC proposal? It's starting to look like real structural change. If this happens, it'll mean futures exchanges can host actual spot products, not ETFs, not IOUs. This cuts through the SEC's endless debate over, is it a security? And lets Bitcoin get treated like what it is, a commodity. Why does this matter? Because institutions real, traditional finance players, don't just want exposure, they want delivery. They want compliance. They want clean risk. And if they can get that from a CFTC-approved platform, that's game-changing. Now, short-term, it might squeeze out the shady platforms, especially those that have been skating in the gray zones. Derivatives volume might migrate, compliance pressure will rise. But long-term, this is the kind of clarity that makes Wall Street show up. For years, crypto's been fighting the same battle. Regulation is the enemy. But maybe, just maybe, the enemy wasn't regulation, it was regulators who didn't know how to eat the pie. And now, looks like they've figured out where to cut. All right, let's talk about MicroStrategy. And I mean, these guys are absolutely relentless. They just dropped another $2.46 billion to buy over 21.0 more Bitcoin at an average price of about 117 per coin. Yeah, at this level. No dip buying here, they're stacking high. Now, how did they pull this off? Here's the kicker. They issued over 28 million shares of preferred stock at 90 a pop, raising more than 2.5 billion. And then they basically took the entire haul and tossed it straight into Bitcoin. This isn't a side bet. This is all in, again. And the wildest part, the market barely blinked. Bitcoin didn't spike, didn't crash, just kind of kept going. It's like the whole industry looked at this and said, oh, it's just Sailor being Sailor. But under the surface, there's a real discussion happening because MicroStrategy now has a balance sheet that's basically Bitcoin or bust. Their entire market value is heavily tied to BTC. And every time they raise money through stocks or debt just to buy more BTC, they're increasing leverage big time. What happens if we get a 30% correction? What happens if Bitcoin stalls for a year? That kind of exposure would wreck most companies. And yet, here they are, doing it again. Some say it's madness, some say it's genius. But one thing's for sure, Michael Saylor isn't just holding Bitcoins betting his entire company on it. He's turned MicroStrategy into a public vault for digital gold. And you know what? A part of me respects that, because this isn't a casual move. It's not about chasing quarterly profits, it's about conviction. The kind of conviction that's either going to make him a legender, a case study, an overreach. In this moment, when I saw the headline, I wasn't thinking about price, I was thinking about time. About how long someone can believe in something so completely, they're willing to stake everything they built on it. That's not just holding, that's living your bet. Alright, this next story, totally different vibe, but it hits just as hard. So, there's this Nasdaq-listed company called Verb. They used to do interactive video tech, think B2B SaaS. Not exactly crypto native, but now, they just announced a plan to raise $558 million and use most of it to buy Toncoin. Yeah, they're not building apps, they're not launching a product, they're literally taking over $500 million to scoop up Ton tokens. Their reasoning? They say Ton is the closest thing they've seen to real Web3 architecture. The CEO even said, the structure and use case of Ton aligns perfectly with our vision for where the internet is headed. Now, when this hit Twitter, people were like, yo, are y'all serious? You make conference software, and now you're a layer-owned maxi? And not even Ethereum or Solanate's Ton. A younger chain, less liquidity, more risk. But you know what? The Ton community, they lost their minds in a good way, because this isn't just an endorsement. It's the first time a publicly traded company has committed real capital, not to BTC, not to ETH, but to a newer ecosystem like Ton. And it shows. Ton recently hit new highs, and even though it's cooled off a bit, volume is still up. Futures open interest, record high. The market's definitely watching. But what got me thinking is could this be a new playbook? We've seen MicroStrategy go all in on Bitcoin. Now Verb is going hard on Ton. What happens when more publicly listed companies, especially the ones not from crypto, start taking positions in ecosystems? It's a risky move for sure. Some folks are already saying Verb might be doing it for the hype, maybe even to pump their own stock, and yeah, that's worth keeping an eye on. But for Ton, this is a huge W. They've got someone with real dollars showing up at the door. And me? Yeah, I felt a little FOMO. But I'm also watching carefully, because if Ton doesn't deliver, if the ecosystem doesn't back up, the hype of this won't last. Still, today, Ton's got momentum. And that, in this market, is everything. Let's talk about Barry Silbert for real. If you were in crypto before 2021, this guy was everywhere. Founder of DCG, the man behind Grayscale, the face of institutional crypto. Back then, Grayscale's GBTC was the way for big money to get into Bitcoin. People literally called him the godfather of crypto capital. Then it all went sideways. After the FTX crash, trust in the industry tanked. GBTC started trading at a massive discount. Barry got dragged hard by investors, by regulators, even by his own partners. Eventually, he stepped down from Grayscale's board. It felt like the end of an era. But now, he's back. Officially. Barry Silbert has rejoined Grayscale's board as chairman, and he's not just here for the title. Word is, Grayscale's already filed to go public. Quietly. Last month. And they've been moving fast. Over the past year, they successfully converted their flagship GBTC and ETH Trust products into fully approved ETFs. That's huge. A year ago, people were saying it'd never happen, but now, it's real. They're also stacking the team, adding execs in operations, marketing, PR, HR, the whole deal. This isn't a maybe. This is IPO prep mode, full throttle. What does this mean? It means Grayscale's coming out of the ashes swinging. They're not just surviving the bear, they're aiming to become the publicly traded crypto asset manager, like BlackRock but born on-chain. And if the IPO goes through, that's a milestone, not just for them, but for crypto. It's Coinbase going public all over again, but this time with billions in assets under management and a decade of history behind it. From a market perspective, this sends a clear signal. The institutions are reorganizing, the suits are coming back, and this time they're not hiding in the shadows, they want to lead. ETF flows are already insane. Bitcoin ETFs in the US have over 160 billion in combined AUM now. Grayscale used to be the joke with the 40% discount. Now, it's legit, it's liquid, it's regulated. For retail, that means more stability, more trust, maybe even more upside. But let's be real, Barry's timing couldn't be better. The market's warming up, regulations softening, institutions are reloading. So yeah, this isn't just a comeback, this feels like a reset for the whole game. Okay, this next one sounds like sci-fi, but it's real. French lawmakers want to use nuclear power plants to mine Bitcoin. Yeah, not a joke. A group of French MPs is drafting a proposal that would allow Bitcoin mining operations inside nuclear facilities, specifically to make use of excess energy that would otherwise be wasted. Why? Because France is the nuclear king of Europe. It produces more nuclear energy than any other country in the EU. But here's the thing, there are long stretches of time when that power isn't needed. Especially at night or during off-peak hours. That energy, it just disappears. So the idea is this, rather than wasting that unused power, why not plug in mining rigs? Bitcoin mining doesn't care about peak hours, it runs 24/7. And if you can convert throwaway electrons into digital assets, that's not just efficient, it's profitable. One of the key backers, MP Aurelien Lopez Ligori, is calling this a strategic play. He said, and I quote, "Our nuclear energy is strong enough to power digital assets." That's a wild sentence, but in this context, it makes sense. And it's not just talk. Mainstream French media is covering this seriously. Because this isn't back-alley mining, it's institutional, government-integrated Bitcoin production. If passed, this would mark a massive shift in how crypto is treated in Europe. And France wouldn't be alone. Pakistan's already allocating 20 megawatts of spare power to national Bitcoin mining. Tether's building green mining ops in Latin America using agricultural waste. Globally, Bitcoin is slowly being rebranded not as an energy waster, but as an energy converter. Now sure, this French proposal could hit resistance. Nuclear policy is touchy. Environmental groups are already raising concerns. Some fear public infrastructure could be co-opted by private financial interests. But still, this is a narrative shift. We've spent years watching Bitcoin get dragged for being bad for the planet. But now, countries are realizing it might actually solve energy problems, especially in places where energy can't be stored or sold efficiently. And that, to me, feels like the beginning of a new Bitcoin narrative. One where BTC isn't just a currency, it's a geopolitical tool, a buffer for surplus energy, a new kind of national reserve asset. And if France goes through with this, they'll be the first to say it out loud in legislation. This last story, it's not flashy, but it's solid. Cardano just got a 70 million developer budget approved by the community. Yeah, 70 million. Real funds, not marketing, not VC fluff. This is treasury money coming straight from on-chain governance. The proposal passed through community voting, and now the funds are locked in for the next 12 months. What's it for? 3 things. Mainly, first, network scalability, higher TPS, better concurrency, more efficient block handling. Second, smart contract upgrades, especially around Plutus, making it easier to use and more dev-friendly. And third, real-world integrations, identity, stablecoins, government systems, cross-chain protocols. And the best part? This wasn't decided behind closed doors. The community voted. Token holders made the call. That's the kind of governance Web3 always talks about but rarely sees executed this cleanly. When I read the news, my first thought was, this is Cardano being Cardano. Not loud, not trending, but quietly stacking bricks. Cardano might never be the most hype-driven chain, but every few months you look back and realize they've been building, consistently, carefully. Will this budget let them overtake Ethereum overnight? No. But could it plant the seeds for Cardano to become a real, stable public infrastructure layer in 3 to 5 years? Absolutely. This move also signals to builders the kind who care more about writing code than chasing pumps. The kind who stick around through bear cycles because they're here for the tech. The market noticed too. ADA popped 2-3% after the news. Not crazy, but noticeable. In a flat market, that says something. The effects won't be immediate. You won't see a DeFi explosion tomorrow. But 6 months from now, a year from now, don't be surprised if a wave of new projects starts blooming on Cardano. In a world chasing fast gains, this kind of long-term investment stands out. Because systems like these, they're not built on hype. They're built with money, with time, and with people who know what they're doing. All right, that wraps it up for today's Web3 Daily Recap. The market itself, not too wild. BTC hovering around 114th. ETH showing signs of strength, but mostly just sideways action. But under the surface, there's a lot going on. If you're feeling beat up, maybe take a moment to reflect on that British guy who finally gave up on finding his hard drive with 80 BTC. If you care about compliance, keep an eye on the CFTC's move toward regulated spot contracts. If you're tracking institutional plays, don't sleep on MicroStrategy's 2.4 billion Bitcoin buy. Ton Maxis, that Verb announcement is worth your attention. Grayscale's IPO prep is also something legacy watchers should stay close to. And for builders, Cardano's 70 million dev budget might just be the quiet signal you needed. Crypto is becoming a puzzle. The more pieces you pick up, the clearer the big picture gets. We stare at prices every day, but what really moves the market? It's this stuff, the deeper plays, the positioning, the signals. Stay sharp, stay curious. And remember, trades are short term, but understanding, that's the long game. See you in the next one.